Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Hey, somebody says, help us get to 8,000 subs. We are so close. I have no idea what our number is here, but what the hell? Subscribe now, or we're trying to get to 10,000 subs. We're very close. Subscribe now and help us reach our goal. All right, I was told by the marketing department to say that today. Probably totally butchered that, but what the hell. Welcome back to the Daily Brief. This is our public show. Of course, we have a show that we dovetail with this following the public summary show called the Afterparty, and actually that's, I think, where we have the funnest discussions and we sort of dig into different ideas. Had a great presentation by Mr. Panicook himself, Tricto Seord, yesterday, talking a little bit about tokenomics in various different altcoins and some interesting names that he's kicking around right now. So maybe pop on the site, check that out if you have a few minutes. General markets message, I think, on balance, everybody, of course, not that gentleman, but everybody right now is watching, not that gentleman, well, maybe him. Where is the old man? Oh, not that gentleman. Jeez, I'm hitting oh, now we're popping on over to shorts. Well, Brian's really butchering this. There we go, that guy. Hey, anybody, actually, I want to go back and watch the rest of this later on. But anyway, Mr. Powell's. And actually, it's interesting how they don't even give this a historical name anymore, which is a little bit surprising. But anyway, it used to be called Semi-Annual Humphrey Hawkins Testimony in front of the U.S. Congress. But they seem to have dropped off the Humphrey Hawkins these days. But anyway, so that's basically what we've been spending yesterday. And this morning, paying attention to, see if there's any sort of, nuggets of wisdom, value bombs dropped by all these guys. I think on balance, the message is generally the same. Nothing's really changed a heck of a lot. Am noticing that the, first off, I guess a couple just general themes. Number one, and of course I teach this in our education program, we are fully into a U.S., your millennial generations, might even be generation, yeah, I think it's the millennials, but I could be mistaken. It might be Gen Z, I don't know. That specific generation's growth cycle. Of course, the United States just went through the baby boomers' entire life cycle, and they're now done. But now, they've basically passed the baton. The Great Reset, sort of setting up the economy for the millennials' life cycle. What's it going to look like for basically the rest of anyone who considers them a millennial or Gen Z, I suppose. What is sort of the pricing framework that you're going to exist within? And of course, all of this inflation conversation that we're having right now is just nothing more than the ultimate end result of the big, too big to fail 2008 financial crisis, diluting the shit out of the monetary base to try and just keep the system going. Nobody has said boo to the fact that the emperor basically doesn't have any clothes on. And it appears that the Americans have basically gotten away with, because being the hegemony system, nobody has really called them out on their horrible, fiscal policy. And the fiscal policy, unfortunately, is also promoted right across this Western society. So all of these Western societies are all basically in the same problem, with, of course, this gentleman driving the bus. It's interesting that when we have a new sort of cycle, new intake at TRI, we have to go through the whole process of what the heck is going on here. And what I often suggest to people is maybe pop on over. I think in the library we do a pretty good job. Where's the best place to show this? I mean, there's going to be sort of Brian sort of talk to you about how sort of the trader in you should be set up. But more importantly, I think, especially if we come down into this section of the library, how does the market work? Um, what are bonds and stuff like that. But more importantly, this is the sad part about it, the whole idea of the money masters and this gentleman. If anything, if you really want to understand how the monetary system works, and it's basically been put in place here about 500-600 years ago by certain central banksters that, of course, used to be goldsmiths. And I think, obviously with the leaving of the gold standard, they've sort of, changed the rules as we've gone along here to suit their needs. What happened in 1971 and the collapse of the currency's purchasing power. But the point of the matter here is that, I do see a lot of people get wrapped up in sort of listening to the short-term policy. And, of course, the politicians, these kind of guys, up here on the other side of the podium, they're just going back and forth and trying to score political points. Oh, it's all their fault. It's all their fault. It's all their fault. When, the sad part about all of this is that they're missing completely the whole message of what's going on here with the monetary system. It's all completely overshadowed. And unfortunately, I do think to a certain degree that is the 1%'s plan. If anything, these political parties are pretty much cut from the same piece of cloth. If you ever heard me talk about politicians, especially these democratically elected politicians in our modern day society, I mean, how can you tell when a politician is lying to you? We all know the answer to that. In fact, actually kind of a funny anecdote before we get into the actual econs. I put out a tweet the other day. It was absolutely perfect. I thought this was absolutely spot on. But a little bit more of a snarky social commentary than anything else. But if you want sort of a very real look at the way the political system works and how it sort of feeds the oligarchs and who's really driving the bus in our society, this person right here, what you didn't know about Congress, go watch that video, and it's quite shocking. I love sitting and just flipping through the little YouTube shorts, and this totally nailed it. It was absolutely perfect. So anyway, the whole point of it is twice a year, they all go through this charade of being agents of the voting public, but in reality, we're going through the Great Reset. It's already happened. So bitching and complaining about the rate of inflation right now is kind of like, us standing there. And actually, this is the analogy that I use with all the students when we're trying to sort of assess what they did wrong in a previous trade. We're standing there. Behind us, the barn doors are flapping away. Terrible storm. We're both, standing side by side outside the barn. We look over the hills and you see the horses running away over the hills. And you look over at me and you say, well, what do you think? Should we have closed that barn door last night? And, the answer obviously is, yeah, we probably should have put 2 locks on the door. So, it's an interesting theatrics. And, of course, it also keeps the public amused and keeps them occupied. But that's all it is. It's just theatrics right now. So, anyway, it is interesting to watch the reaction in the market in the short term. Was a little bit surprised, to be honest with you, looking at things like the bond market didn't like what it heard there about potential U.S. debt downgrades because of all this humming and hawing about raising debt ceilings and stuff like that. I will say that the politicians made a perfectly valid point that, if we didn't have these over-the-top insane tax cuts that we got through the Junior Bush years and then through the Trump years, probably all these deficits and sort of the fiscal problems that we have probably wouldn't be nearly as bad. So, it's a combination of both. It's a combination of why did they make so many massive tax cuts for the rich? And then conversely, why did the socialists, at the very same time that they've cut all these taxes for the rich, go and jack up spending programs right across the board? And hence, we have now a situation. If I understand correctly, what I heard from these talking feds this morning was that this should all come to a head probably somewhere around middle of June, middle of July. The interesting thing about that, of course, is that we have an old cliche in the market: sell in May and walk away. So you may find, and usually what I find is usually the market troughs in about the middle of June. You know, if we go back, and I don't know whether I can do this on the fly, but you can see here's a good example. You know, we troughed sort of the middle of June. That's a very typical seasonal trough. Then we have, we usually enjoy a pretty nice summer rally. And then, of course, we get ready for the fall trough. And then this gets into the buy when it snows analogy. So I wouldn't be surprised if we have another trough here in the late spring. But, you know, actually interesting, just looking at this chart, this daily chart, I mean, you can see the very noticeable bottom down here in the market. Also, too, last October, November, this is where we got our last really big buy signal. We got another buy signal in the market here just a week or so ago. But interesting that you can see that counter trend rally's kind of exhausted itself. And now we actually just went and put in a little bit of an empire top here on Mr. Powell's testimony. You know, why is this sort of this counter trend rally exhausting itself and coming back down? I think generally the scuttlebutt is that Fed's, you know, its statement coming out yesterday and earlier today, you know, this stuff is the Fed, you know, I think they see that the economy is still relatively strong. The data is still coming in pretty strong. And so as a result, they're probably going to have to continue raising short-term interest rates. I don't think that's a huge shock to anybody. It shouldn't be a big surprise. We looked at the money cycle chart, and we know that according to the money cycle chart, this thing shouldn't turn until somewhere around middle of the summer anyway. Also, too, we're in that time period, you know, buy when it snows, sell when it goes. This is actually when the economy is strongest. And probably also, too, if there was, you know, any sort of, you know, retail sales sort of follow through following November, December last year, we're in this sort of that wake right now. And as you can see from the data specifically, numbers are still pretty darn strong. You know, they're so strong that you have to ask. In fact, Mr. Powell even made reference in his speech this morning. He even made reference. I haven't seen what the JOLTS numbers look like, but if the JOLTS numbers are strong, well, then that probably means that we still have more work to do, or i.e., we got to raise rates. So JOLTS, speaking of which, 10.8 was the actual number. Market was looking for 10.6. So I suppose you could make the argument that there's a few more job openings than anticipated. I think if anything, probably the Fed wants to see this number go down. So I don't know whether we have a breakout, but actually you can even see nice double bottom coming in here. So whatever this data set is telling us, it is, I mean, if that was a stock, I mean, technically that's a double bottom. So that's sort of humming away. Does he want to bring this thing down and crush it? Got to sneeze. Hold on. One more? Yep. Nope. Yeah, 3's lucky. So that's good. If it was only 2, that would be a sell signal, right? Anyway, I think Mr. Powell would like to see this calm down. So as a result, probably still need to have a bit more rate increases there. And then on the other side of it, job quits. People actually giving up on their jobs. Market was looking for 4 million quits, but we actually only got 3.88. Is that I mean, like, it's interesting how this doesn't have a red bar by it. So I guess the quits, they're not nearly as interested in them as the job openings. So it'll be, long and short of it here. Powell even made reference. So it'll be interesting to hear how the talking feds and stuff spin that. You can see the Canadians have said that they thought that they were done with their interest rate increases, and they did not raise interest rates here today. But what I did find interesting about that, and actually it's kind of funny, Microsoft here is trying to, are they, and this is what's really I don't like about Microsoft. Of course, they're extremely suspect, I think is probably the best word. But interesting right up here, like, why have they decided in their news release everybody is using Microsoft Windows or whatever here in the Canadian market is spoon-fed this message that the Canadian dollar's collapsing here. I don't know whether 0.0 or 0.23% is a collapse per se. But I have noticed, and you'll probably see this, I've talked about this a lot. I do believe that Canada is a short and will be a short for quite some time. But you can see the Canadian dollar is having a pretty tough go of it here. And I would imagine this is only going to get worse as time goes by. If we look at the daily chart, might be interesting. Yeah, I mean, clearly you can see that's heading in one direction. We potentially had a big W come in here, and you can see this is a great piece, Chris. If you want to do a short, here we are. All right, so you want a nice little piece of information that you can use. If you ever notice, the big message is if you ever see the market smiling at you, our message is that the market's probably getting ready to take your money. Now, if you want to take this to the next level, what I have personally found is if you ever see a smile within a smile, almost like the right-hand side of the smile is winking at you, that is an extremely powerful trade location right there, folks. So, as you can see, the smile within the smile, I mean, you could make an argument too, there's probably some play with trend lines here. But very, very bearish signal right here. And sure enough, Canadian dollar's crapping out here. So, you can even see it over here. You had this big top here, then a bottom, then a top. And notice the little smile within a smile. And what's the end result? So, really good tradable information that you can use to help you sort of understand. Yeah, I mean, maybe you take the trade, maybe you don't, but at the very least, at least you can hear the market's message. I mean, when you see these little smiles within the bigger smiles, the market's really trying to talk to us. The question at the end of the day is, are we actually listening to what the market is saying? And at the same time that this was all happening, the central banksters in Canada come out and publicly say, we are not going to raise interest rates anymore. And the ultimate question is, in our Fakazi fiat currency world, how do you actually value this yellow line? How do you actually determine that there's going to be more demand and the price of this yellow line is going to go up, or, the value of this yellow line is going to go up, or there's less demand and the value of this yellow line is going to go down? And the answer in our screwy fiat world is it's purely a function of, are the central banksters going to be paying you more to hold their currency, i.e. higher short-term interest rates, or are they going to be paying you less to hold the paper? Because that's really all this is it's just an IOU. And so, great anecdote. If you can connect the dots, banksters say we're not going to raise interest rates anymore. And interestingly enough, that's exactly what they've done. So, hey, at least they're to their word. Bank of Canada, where's Bank of Canada interest rate decision? We are not raising rates, and indeed they did. So what does the market say? The market says, well, the Americans are talking about raising their interest rates. They're going to pay us more to own the U.S. paper than to own this Canadian paper. Do I want to own the U.S. or the Canadian paper, or do I want to just get the heck out of it and I'll go buy U.S. T-bills? that are going to pay me a higher rate of return. It's just that simple, folks. And that actually is what we call rational analysis, where you connect the dots of what fundamentally is going on in the marketplace with the technical picture, smiles within smiles, and you see the end result, which actually turned out to be probably a pretty good trade. And, sadly, let's take a look at the broader picture. Do we have sort of a theme going on here? Lower highs and lower lows. Now we're looking at weekly price charts, and I'll tell you, weekly commodity trend survey, you hear me talk about that lots with you guys, in the crypto space and stuff lately. But it also, I started doing this in the commodities pits when I was a commodities broker, and I'll tell you, that's a damn big sell signal out of the Canadian dollar there. So, interestingly enough, the worst part about this, and Meg, you're going to love this, is that this, unfortunately, is highly inflationary for Canada. I don't know. Meg, you're here with you. Yeah, there she is. How are those prices at the grocery store doing for us Canadians these days? How's it going? Is it getting any better? I thought it was interesting. It's so bad now, and yet, unfortunately, people don't understand that if you go and dilute the crap out of your currency and you go massively into debt, that's going to erode the value of the currency. Under the conservative, more conservative government in the past, Canada's currency actually hit a relative high versus the US dollar. But interestingly enough, wow, what a great example of that smile within a smile, eh? And this is on the long-term top. But notice, can you guys see? Look at this cool little smile within a smile right there. I mean, that is exactly that whole concept that I just talked about a moment ago. But why was the Canadian dollar going up like this so much? And the irony of it all is because it was through this period, the Canadian government was actually paying down its debt. And when it was paying down its debt under a conservative government, the currency was flying, and that was actually very deflationary. And of course, Canadians enjoyed a very good standard of living here. I can tell you right now, under this scenario, and of course, substitute drama teachers don't understand any of this because they're substitute drama teachers. That's a bad sign for the capital stock of the Canadian country. But anyway, it is what it is. All right, rant. But interestingly enough, on a side note, this is actually what's supposed to happen this part of the cycle, and this should happen. This should carry on for probably about the next 10, 15 years. And really what this is checks and balances. Canadian economy was so, through 2010 Olympics, this is when Mr. Trump came to Vancouver, and he was like, oh my God, I got to buy this thing. And he just went and bought a property and boom, instantly put up a Trump Tower. I mean, and Canadian real estate was all the rage. Everybody was in love with Canada. Now, we always say, kind of a side note, what's the cure for high prices, right? You might argue Canadian dollar well above the US dollar. It's some pretty high prices. Well, the cure for high prices is high prices. And boom, down goes the Canadian dollar. So you might even call this a self-correcting mechanism. It is taking care of itself. The only problem is, and probably all you long-term followers of me, you should look at this chart and say, well, doesn't that look like one of those bot things that Beamish guy's always barking about? So we can actually give you an idea of where this Canadian dollar is going. This should be a little scary. Boom, and this should probably be more like Afterparty conversation. So I'm going to put the levels on here. So there we go. So the ultimate destination for the Canadian dollar, actually interesting. Look how we're getting that M coming in right off the bot short entry level too. I'm not going to show you. Maybe in the after party we'll take a look at where the hell this thing's going. But I can tell you absolutely that shadow of a doubt. Klaus's great reset, Trudeau and his insanely idiotic fiscal policy here, it is going to expedite the collapse in this Canadian dollar. Wouldn't surprise me one bit. If anything, what you got to hand it a bit to the Americans is they're actually trying to get their act together. There's just no sign of it, fiscal responsibility in Canada right now at all. Just none whatsoever. And so as a result, you see what's happening with the Canadian dollar. Anyway, blah, 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 blah. Kind of a fun talk there. Sorry, everybody. Broader market, actually, I'm following the Dow really closely. We had our Stock Pickers Club meeting last night. As I had said, an interesting level that they rallied the market back into. You could make the argument that this is basically a big M top there. That's confirmed. There's the same conversation I just had with you about the Canadian dollar. What are we supposed to think if we see the market smiling at us? The market, they counter trend rallied. They had a big old gap. I mean, this huge hole in the gap needed to be filled in. So I think that makes sense. This is the tech stocks. This is actually the friendliest part of the market. If we actually go and look at something like the Dow, this looks a little bit more bothersome, to be honest with you. Bricks and mortars, old legacy economy, blah, blah, blah. Hasn't quite gone and topped out yet, though. I think you could make the argument this is maybe even a smile within a smile within a smile. A whole bunch of smiles here, eh? So there is this one, up, down, up. Do we fail through that level? There is this huge one, up, down, up. Do we fail? So we're kind of just sitting right on the precipice right now, eh? Interesting how we have potential. Actually, not a potential. This is a confirmed empire now that we've gone through this low. So do we have to do a bit of backfilling here on the U.S. index? It's a tough one. I'd keep an eye on this low. Listening to the market's message, just listening to what the not necessarily taking the trade, but just listening to what the market's saying to us. You can see there seems to be quite a bit of supply. We get up into this area, you can see all these levels where the market just rejected the rallies. So clearly there's a bunch of supply up here that just keeps hitting the market. Interesting how the dead cat bounce rally. In this case, we could get up to fill in the gap into this sort of most recent double top fail level, and then we just painted that empire. And of course, like I just said there a few minutes ago, this is on Mr. Powell speaking. You can see, big old M. This is the short-term charts down to the half-hour charts. Coming in on the ES, there is our Dow, just looking very, very heavy. Russell 2000 looks like it's rolling over. Interestingly enough, the only part of the market that's actually relatively firm here seems to be the NASDAQ. Not quite sure what that's all about. Interesting, too. I noticed this morning, Bitcoin actually firmed up quite a bit. But kind of like this image, I might argue that Bitcoin, maybe Ethereum to a certain degree, would be like the big NASDAQ stocks. But something like Litecoin and the junior part of the crypto market would be more like the Russell 2000, the small cap, the venture part of the market. And you can see venture still looks very heavy. Lots of M's coming in here. Did have sort of a sell pattern. This actually is my funny little bot setup that I actually used to get funded as a prop trader. It works very well. No guarantees that it's going to be 100%. There's nothing that's ever 100% in this game. But this is the Bitcoin chart. This is the 4-hour chart, of course, on social media over the weekend. And I think I want to get into this habit. I just simply put out sort of a start at the higher time frame. What is the weekly chart trying to tell us? We did fire that inside bar. Actually, Chris even made a little short about this. It is a perfectly valid setup. It is even technically a harami. Then we go down to sort of the medium term. I haven't really talked too much about the medium term here over the past few days, but I do like the idea that this is some sort of base. Wasn't feeling so good last Wednesday, so I asked the boys politely if we could put the show on hold. But we'll try to make a concerted effort to come out and do a crypto show tonight. So maybe we'll dig into this a little bit more in detail. But I do like the idea that we probably need to come back down. Wicks and tails like to be eaten. That tail there looks awfully juicy. 38.2 back into this previous market structure floor. I like the idea that we need to work down into this level. And that ABCD That if we drill down now to that 4-hour chart, that is this pattern right here. So A, B, C, D. There are those tails that I think need to be eaten. Bottom of the profile, you can see all this part of the profile is still kind of empty. So we could do a bit of backfilling. I think basically over the past few days, my commentary here was over the weekend, this looked very rangy, and we sort of banged into Brian's favorite fib. So thinking maybe counter trend rallies back up into Brian's favorite fib going the other direction. A lot of times when we tank like this, we'll just come back and kiss the POC from the other side, then roll back over. It looks to me like maybe the bottom of value was just too much of a hurdle here. So with that kind of image in mind, keep in mind downside targets still, I think, very much alive. If we now look at the actual real-time chart, you can see when we sort of zoom in on that image, this is that bigger A, B, C, D. There is that 4-hour move up, and I did the tweets on Sunday and stuff, so that was here. Shortly thereafter, you can see they rallied the market up right into, sort of, I don't want to take too much time to set this chart up, but right up into what appeared to me actually to be the POC previously. Actually, let's just go off of that range. There we go. That's an interesting image. So, like I said, I kind of thought we were going to bang up into here, but you can see they sort of got up into 33 against this. Didn't even get up to against this low, which is interesting. Put in railroad tracks and then just started to break down. The railroad tracks itself was enough to get me to actually pull the trigger. I love railroad track signals. It's a very small risk window. Here's another little short for you. This, whenever you see two bars like this, where you have big solid green bar and then almost exactly equal solid red bar, this is a very, very well-defined battle zone in the marketplace. I think actually, you know what we're calling this? I think we're calling this Trader Tips with Coach Brian. So, for the YouTube shorts, for the public broadcast, those kind of things, this is actually a very, very good little trading tidbit for you. So I like to call these railroad tracks. You can see the highs, not much of wicks, not much of tails, big candle bodies, and basically it's just a reversal. If we go through this second candle's low, that's a sell signal, stop just above the railroad tracks. And you can see what happened. I mean, it was spot on. So you can see there was my little sell level. Still working this trade. This is an interesting juxtaposition because what I like to do sometimes is what I call front running the bot, where I draw up the technical objectives and I see, because at 50% of the technical objective, there's the technical objective all the way down there. At 50%, I get a permission to move my stop to scratch. So that means I get to move my stop to this 25 level because that's technically the entry level of the bot. And that kind of makes sense too, because you can see this is basically a trading range. So failure of this is basically I'm going to short that level and I'm looking for the downside move here. So it sets up a really nice 3-to-1 risk reward. Point here is if I can front run the bot, then if we do trade down to this 21.6 level, we might do that later on today. I can move my stop to the 25 level, but because I'm short from here, I actually can build in a little bit of a profit. So I'm actually pretty excited about that position on right now. I shouldn't lose money. Now, we haven't hit this 50% level yet. So technically, if the market does come right back up against these highs, I get stopped out on a move above that high. But notice, look how the trend lines are now actually naturally setting in a massive resistance level just below my stop. I think that's fantastic. And it's not an accident, I don't think. So stop should be up here. And you can see trend line resistance should stop any kind of counter trend rallies up in here. I mean, personally, I would prefer that this thing just dumps straight into my levels. I don't want to have to go through that headache. But as you can see, up at 159 bucks, 49 bucks on the trade. So I ain't got nothing to complain about right now. And if somebody was going to ask me, what do you think going forward here over the next few days? This is probably the answer that I would give, is that I'm looking for lower. And until this thing actually does start Wing out, and more importantly, and I do like this kind of thinking, can't really start getting bullish of Bitcoin and crypto and the whole space and stuff until I actually start seeing these higher time frame charts start to turn around. As I said, the medium term, that's still pointing down. That's a bear ABCD any way you look at it. There's no W's there. And then off of the higher time frame, the weekly chart, well, that's an inside bar. The bear ABCD is actually coming on a Harami signal. So we got to see these things clean up before I start getting uber bullish. Now, having said that, I mean, crypto is crypto is crypto. So if you did go and buy, and I hate to say the names because they're so rude, but it's so typical of crypto. If you did go buy things like Cum Inu, crazy. Well, I think actually we just got another sell half on a double order level hit. So, speculative assets are speculative assets. Look at these crazy things, up another 2.5% on the day. Oh, look at that. So there was our sell half on a double level. It was traded to. I don't know. If it's done, that's fine. We've actually gone beyond 4669s. But in essence, this is what I'm trying to teach all of you guys to do, is try and come in at the bottom end of ranges. Was that cheap? I think it was pretty cheap. And then when they start pricing them up, you don't have to sell everything here because you don't know where the hell the top of the market is. So what I suggest people do is just spoon feed. Set up some sort of regular plan. The sell half on a double plan works really, really well. Don't become emotional about this. Just follow the plan. So here's a great example where I certainly didn't expect this kind of rally. But hey, it's come into another double level, so we probably better get some sell orders working. Anyway. On balance, I think you can see the market generally is got a bit of a red tone to it. Like I said, we're probably going to find that things are a bit soft. Interesting now, where I actually bought the Cripple because of the weekly commodity trend survey. It had a 6 rating. Weekly W's are working, and look at that. That's one of the names that actually is working today. Go figure, eh? So what a great analogy of you don't know what the hell's going to happen in the marketplace. A week ago, as this thing was heading down, people were making fun of me because I went and bought Cripple. Now the rest of the market's melting down and Cripple's actually rallying. Go figure. Anyway. All right. I think that's about it for the summary of today. I didn't really see a lot of sort of stock ideas that really jumped out at me last night. Like I said, this Dow chart, that looks awfully heavy. You can see the gaps down below. So, oh God, do I really want to get involved in that? What I did notice was some of these bear ETFs. This is the bear Dow proxy. Well, hate to say it, folks, that sure looks like big honking weekly W's to me. So I don't mind that kind of thinking. And then the NASDAQ, this was an interesting level here. This is actually back to the original bottoming level. So I am going to be watching for whether I can actually do a trade in here. See whether I can sneak in. So, there's your market backdrop. We did have some fun names. Once we actually start seeing actual bottoms come in, W's, that kind of thing, you might want to consider how this Zoom looks going forward. I don't think it's a buy today. But, this is a good example where, gee whiz, they're just throwing the baby out with the bathwater. So we did look at this one last night. You might consider TRI SOFs. If we do actually start getting signs of W's coming in here, you might want to consider a spread. You can see there is W's actually working here. We are filling in gaps to the downside. So I was interested that one of our club members mentioned this one last night. And if nothing else, I'm a cheap ass. So when I look at a chart like this, I start to get interested because the cheap ass in me starts saying, hey, at some point this thing's probably due for a 50% bounce. And if you don't think that can happen, I thought it was fascinating that, Facebook about a month or so ago, we were basically having exactly the same conversation. I guess it was last fall, where, it had just been a fallen angel, and then all of a sudden these rallies just perk up out of nowhere. So you might say, well, no, Facebook's apples and oranges. It's just a chart. And anytime I see an asset that's right down at the bottom end of its range and it's starting to show signs, this one didn't really show signs that it was actually Wing out until over here. But, there's countless stories of these. I think NVIDIA was another one. Or Netflix, NFLX. This was a really good example of one where they're just throwing the baby out with the bathwater. And down here, if you had just gone and bought a call option or a nice spread, of course, you can see you would have been a pretty happy camper now. So I like that zoom just simply from I'm a cheap ass perspective. Did see one stock. It's a Canadian stock, so it's not really relevant to Americans or international. But this company, SNC, I think it is. Yeah, SNC Lavalin came up as a very strong reading on our technical engine. And I have to say, it's a pretty good looking chart. If I zoom out, you tell me. Does that thing have any room to move up if it starts getting going? You can see the weekly, monthly W's. It's breaking to new highs on strong momentum. It's a little bit expensive, maybe, but it just spat out a huge upside-outside key reversal. And I thought it was interesting that I like to follow barchart.com. And it actually has a strong buy rating on this stock right now. I think more because of earnings and earnings momentum. But, you could even see that if we just do simple things like Foggenbaums, boom, there's a target up there. So that we're probably coming into resistance up against this high. That would make sense. So following that event, I will be sort of watching for any kind of reload zone pullbacks down the road. I might take a good look at this thing if we can pull back, maybe through the summer. I don't think I can really chase that there, but wow, what a base. So this is probably something that I could maybe invest in my retirement plan going forward. Of course, interesting anecdote. The Trudeau and the Liberals, they're deeply, deeply in bed with this company. So the fact that it's breaking out higher means that they must have bought somebody's influence in my nation's capital. Who knows? All right. I think I'm probably going to leave the presentation at that today. I don't know how long that was. That was about a good half hour, 40 minutes or so. Hope you got some value out of that. Interesting. We get a little bit of softness now coming in on the risk assets. I'd watch that Dow. If the Dow breaks through key support that was put in recently, then we're probably back into correction mode. But for the time being, actually, it'll be interesting to see whether the corn can hold in here or not. All right. There you go. Take it for whatever it's worth. Hit the like button, subscribe, help us reach 7, 8, 9, 10,000 subscribers, whatever the number is that we need to hit. But slow and steady wins the race. Don't take no wooden nickels. And, of course, maybe consider popping in and joining the site to participate in the after party show, which we will do as soon as I stop talking here. All right, have yourselves a great day. PMA for the win. All the best, and bye for now.